An indiscriminate risk surge has boosted stock prices by billions of dollars, driven Bitcoin skyrocketing to a new life high and fueled a broader bullish market rally. However, many Wall Street experts have questioned the longevity of this rally through this year. Except for the brief summer market jitter, they've been completely incorrect. Take a look at our next report for more on this.
Wall Street is clearly betting on new highs and riches ahead in markets all in on Donald Trump. This comes in light of Trump's return to the White House and the subsequent surge in asset prices. But a new and different worry has emerged that investors are not being bullish enough. That sentiment is driving the latest purchasing frenzy in stocks and crypto. An additional $20 billion poured into market funds on Wednesday alone on Trump's win. This contributed to a total of roughly $2 trillion added to stocks during the last 5 sessions. Banks also soared. Small cap businesses increased by over 9%. And Bitcoin reached a new record high. Trump's pro-growth promises of tax cuts and deregulation are fueling this surge. This comes just as the Federal Reserve tilts towards an easy money stance. However, concerns about the high price tag of such fiscal stimulus remain. Wall Street is now falling over itself to predict how far the everything boom goes. Future markets are betting that the rally in Bitcoin is just a start under a pro-crypto administration. While it's true that momentum breeds momentum, the rally risks blinding investors to lingering economic and high debt concerns. The risks are in plain view. More trade tariffs lead to distortions in already disrupted supply chains, high inflation and budget deficits. Another top risk is that the Fed steers away from policy easing. Business Bureau, beyond World is One.
And for more on this, we're now being joined by Dr. Andrew Freire, CEO, Acognosis Advisory Limited from Hong Kong. Thank you so much for joining us on World Business Watch. To begin with, what's your outlook for global markets?
Overexcitement, and it reflects very much what happened in October the 3rd when China injected a huge amount of money into their own markets. Of course, shares really leapt, and then a week later, they were down again. Remember, when Trump won, the market was already at a record height. I'm talking about the S&P. So going up further simply makes the markets considerably more expensive, and purely on the basis of expectations. There is nothing on the table. I would like to remind my clients and everybody else that Trump doesn't become president till, I think it is 23rd of January. So we have the whole of November, the whole of December, and practically the whole of January before Trump is actually president and can begin to do things. So the rest of it is just pure expectations. And on the top of that, now we're having more and more and more concern that major policy tax of Trump, in particular, the reduction in tax rates and the elimination of undocumented immigrants may very well be inflationary, in which case, of course, it stops the Fed from considering cutting further interest rates. Can you imagine if the market wakes up one day and says the Fed is not cutting anymore? It's all going to end up with this. It makes a lot of sense that the markets are up because Trump's policies are very market friendly, but they are not there yet. Neither we know the very market unfriendly consequences of a lot of his policies.
Right, sir. Now, just on that, do you then reckon that Trump's trade policies risk inflation and a Fed pivot away from easing?
It doesn't risk, it is going to affect. You know, there is this obsession that tariffs are different from any other form of purchase tax. I want to say loudly, hello, a tariff is a purchase tax. It's no more different than a purchase tax. It puts up prices, full stop. Trump is not going to avoid putting up prices if particularly he goes ahead with either a 10 or a 20% flat tariff across all the things that are important in the United States. And of course, guess what? Since a lot of these tariffs are not going to be on luxury items, but on regular use items, because remember, if you go to Walmart, you find that practically everything on the shelves is produced in China. And he's threatening a 60% tariff on China, and this is all going to be passed on the consumers. And the majority of the consumers, I'm sorry, I'm using Walmart because it's an easy way of making this as common as possible, are going to be the Trump voters. They had no idea what they voted for. They're going to pay for it. Remember, every time there is a very significant change in any economy, it is always the poor that pay for it. This is Andrew Ferris's unbroken law. The poor will always pay for it, not the rich.
All right, sir. Well, but that being said, just for more clarity on this, what are the top risks to global markets heading into the year end then?
I just explained to you the top risk is that United States stocks. I'm not saying there's going to be a collapse. I'm not saying there's going to be a crisis, but the expectations are really outrunning the reality. And if the S&P either flattens out or takes a dip, as I expect it will be, okay, this will be reflected right across. And also, of course, the rest of the global economy is crouching. It is trembling with the idea that there's going to be either a 10 or a 20% flat tariff, and of course the same thing with China, 60%. Now, people claim that Trump always says horrible things and then doesn't do them. This is a very risky idea, because if he doesn't, then nobody's going to believe him going down the line. So I don't think he will be able to go, let's say, pedal back what he has actually promised.
All right, well,
so
Dr. Sorry, please
the outlook is not very bullish. Okay.
All right, sir. Dr. Ferris, thank you so much for joining us with your insights on this. Always a pleasure to have you. For latest news, download the WION app and subscribe to our YouTube channel.